Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, October 16th, with your grain market morning commentary. Currently, grains are trading higher across the board. Corn's about 5 or 6 cents higher right now. Soybeans 11 to 12 higher, and wheat's also about 5 or 6 cents higher. In the outside markets, we have the dollar down, we have the treasuries down. Those are the typical safe havens. So, in general, outside markets kind of supportive to grain prices higher right now. Or you could say, hey, we got a little bounce in a market that's technically oversold. We see a continuation of the fund liquidation right now. And where does that end? Yesterday, November soybeans got down to 14.85 and 3/4. That covers about 50% of that gap. I told you we had a gap down there that goes all the way back to July 3rd to the 5th. We had the 4th off. We created a gap there from 14.78 on the bottom to 14.93 on the top. And by the way, 14.85 and 3/4 is about 50% of that gap. So to me, that's a little bit of a bullish sign that the buyer stepped up before that entire gap got covered. So maybe this is just a dead cat bounce in a market that has a short-term trend down. It's hard to say when these funds are done with their liquidation. When they're done, they're done. That's it. But markets tend to overreact. I think this market's a little oversold, especially when we start to talk about demand. After these two most recent USDA reports, a lot of traders are left scratching their head saying, hey, well, if you like beans at $17, demand was still very good above $17. You got to love it at $15, right? So there's a lot of talk that China's coming in buying beans at these low levels. Of course, that's how the market works. The price gets cheaper, the buyers step up. Price goes higher, the buyers back off. That's the way the market's supposed to work. On the other hand, we have corn still hanging around that 740, 745 area. The market did make a new swing low yesterday, late in the day. Corn got sold off down to that 730, 732 area where there seems to be some decent support. Maybe there's some spreading going on, starting to buy the soybeans, sell the corn again. That ratio is about 2 to 1 right now. It's historically closer to 2.5. 2.5 corn equal to the price of 1 soybean. So that's something to look at. If you take the price of corn, you multiply it by 2.5, soybeans should be closer to $18. So let's keep an eye on that. Anyway, like I said, I think these markets tend to overreach both ways. They get overbought, they get oversold, and then it starts to find a level somewhere in between where the true value should be. Yesterday we got updated on the harvest progress. Corn harvest progress 79% complete. Soybeans about 71% complete. We're moving way ahead of schedule. We know that. At some point this harvest pressure starts to ease. We will soon, though, be focusing more on the South American progress with their planting and their weather and whatnot. But, demand is the real story. And right now, we can find cheaper corn, that's for sure. Wheat's probably going to follow corn. It's the same story for both of those. We really have a lack of demand right now. Soybeans, on the other hand, have very good demand, and that's the market that's gone through the big correction. So again, that's where I'm left scratching my head. I think soybean prices are likely to move higher in the near term. I'm not saying this correction is over, but I wouldn't be surprised if yesterday's low was the bottom. So look, that's all I have time for now. There's much more to talk about. Please feel free, give me a call or shoot me an email. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.